again. Right? Like I said before, the concept of demand and supply is applicable in this chart. First of all, we talked about price action that market tends to respect the zone it has respected before and stuff like that. You understand? We talk about different patterns, right? There's something we call mass psychology in trading, right? And definitely, one thing you need to know in trading is that other people are also trading. Like I said before, you are also participants in the market. The banks, financial institutions all over the world, top banks, I don't mean your regular banks, top banks are also participants in the market, right? So there are obvious levels or obvious zones that is everybody's looking to buy, everybody looking to sell. That's what we mean by mass psychology in trading, right? So let's say, for instance, the market at a higher time frame, right? Because we have different time frames. Let's say at a higher time frame, right? Market got to a zone and sold, right? If market should come there again, right? You should expect a sell from that zone, right? So that's what we mean by mass psychology, right, in trading, right, where everybody are looking to buy or sell at a very key pivotal zone in the market. Same thing with this one right here. Like let's say market actually bought from this zone, you can see a buy off from this zone. Now let's look at the chart real quick before we dive into demand or supply concept in the chart so that we can actually understand what we are doing, right? So let's see obvious or demand and supply zones of the market. So let's look at USD CAD, right? Let's look at USD CAD, right? So this pair USD CAD at a point in time was following that mass psychology in trading. I believe you all can see my screen loud and clear, right? If it's not clear on your side, please let me know, right? So first of all, you can see this sell that happened on USD CAD. See this sell that happened on USD CAD, right? This sell, you can see that this USD CAD sell actually sold all the way down. You can see that market actually sold down massively, right? And some people actually missed out on this trade. This trade, imagine you're holding USD CAD, you can see the move, right? This is massive sales from USD CAD, right? This over 500 pips, right? Market was just dumping, following structure. Now, what actually caused this was an obvious level that everybody was looking to sell from, which was this point of interest right here, right? Because definitely the market has turning points. Take note, the market has turning points or reversal point. So like I said before, anywhere market actually reversed from or turned from or reversed from, right, the markets will always come back to that zone in the nearest future. If the market does not come to that zone now, it's going to come back later. You understand? So this zone right here was an obvious level that market at some point came to and dropped massively, right? So these are zones that you should not take, you should always take seriously, right? So let's look at the different time frame analysis for a bit, right? Let's look at different time frame analysis for a bit, right? So look at it closely. Now this is another example again, right? Mass psychology, where buyers and sellers are looking to, mostly buyers rather, or sellers in this case, right? Try to like look for selling opportunities. And this zone right here, you can see that when market came to this zone, what did it do? It sold. So this is a massive or a mass psychology. People looking to want to sell from or put their sell orders from. So remember, this sale happened 2025 January. That was last year January. Now, if market should come to this zone again this year, should I disregard this zone or should I just pretend as if I don't see this level, right? So I have to understand that I have to pay attention to this level if market eventually comes there again. And many people are looking at this zone also. If market should come to this zone, you will see people tweeting, they're looking at want to like sell USD card from this level because why? This zone is from the higher time frame, and the market from the daily time frame is looking bearish. These are strong zones. Now let me say something about time frame, which we'll explain later. But let me just talk about time frame because we are beginning to integrate time frame into what I'm saying, right? So the time frames are just different times the candlestick open and close. We have the higher time frame and you have the lower time frame. Now, for you to be a good trader, you have to analyze on the higher time frame, right, and make your entry on the smaller time frame, right? You have to make your entry on the what? Smaller time frame. Now, what happens on the smaller time frame is entry, while your bigger time frame is mostly your what? Analysis. And in this case right here, if you observe closely, my most time frames are bigger daily and H4 time frame. Take note, daily and H4 time frame, right? These are my bigger time frame I'm actually looking at, right? So now the market for this scenario, right? The zones on the daily time frame, take note, the zones on the daily time frame or weekly time frame are very, very strong or powerful. You understand? So if you see a strong level at the higher time frame, right, please pay attention to that level, right? Pay attention to that level. And this is a very obvious example right here, right? So let's look at one that the market actually respected. Now look at this one right here. Look at this zone right here. This was a resist market trying to like resist from this zone. So you can see that when market came here, what did it do? It sold. So this is a key area, you understand, a key area that markets would want to sell from, right? So if market should come to this zone again, what should you expect? What should you anticipate? You should anticipate what? A sell orders. You have to be looking forward for a sell. But before you look forward for a sell, you have to investigate whether there is a bullish presence or a bearish presence around this zone. You understand? Because you need confirmation, you need the candlestick to be in your favor for you to actually be looking for selling opportunities on the market, right? So like I said before, this zone is the daily time frame, which means each candles you see on this particular time frame, they took a whole day, a whole 24 hours to form. If it's the 4 hours time frame, the time frame, it takes 4 hours interval for each candle to form on that 4-hour time frame, right? Same thing with the 1 hour time frame. It takes 1 hour with interval for these candles to actually open and close, right? So that's it about that particular aspect of time frame. As we progress in the course, we are going to be giving more details on that. Now look at something right here. USD card is actually approaching a very key zone that we cannot neglect. You can see that this zone is a very strong zone. Number one is from the higher time frame. I said any zone that is from the higher time frame, right, they are very strong. Now you can see that when market came here, it sold, and now it's coming here again, it sold, and now it's coming back to this zone again. So you have to mark out those key points or areas on the higher time frame. They are very, very important, right? Those key points on the higher time frame, they are very, very important that you should not neglect. You should not neglect those zones, right? So let's talk about look at another example again before we actually talk about demand and supply concept happening on the chart, right? So let's look at another pair. So let's say for instance GBP USD, right? GBP USD, right? So we're looking at GBP USD, and this is my current analysis for GBP USD. So what are we looking at for GBP USD? We're looking at daily time frame. This is where I pick out my time frame on my trading view, but on the MT5 platform it does not come like this, you understand? So let's look at daily areas where people are looking to buy. Mass psychology, where buyers are strongly eager to push the market, or sellers are strongly eager to push the market, right? So yeah, I just spotted one. Now if you look at it closely, this zone right here is a very key zone. And this is what we talk about price action. You look at past data. Now look closely, you can see that, look at this zone right here. Now you can see that this zone is an obvious or a strong area where market is looking towards react from, right? This blue zone marked here, right here, this blue zone marked right here, you can see that market actually tested the zone, and what happened, it bought all the way up. So if market should come here, you can see that I already marked the zone, so that in case market comes here in the future, even if it takes 1 year, you understand, that doesn't mean that I'm not trading, I'm actually trading. But if market should come here to that zone, I will still trade the price action that market gives me at this zone. But before market will come here, I must have traded this pair for up to 20 times or over 20 times in a year before anything will happen to this key area. So before anything happens to this key area, I must have traded this pair for a lot of times. And when market will come here, I will look for buy opportunity. Now, does that mean that because I'm waiting for buy orders around this zone, I will not trade? No, I will still trade. I will still look for opportunities to trade the market each day. I will not neglect the fact that, okay, I have trades to take as a day and a swing trader. You understand? Me waiting for market to come here is like waiting for a year for market to come to this one, because this is the daily time frame. So imagine you're waiting 2, 3 months, 4 months to trade. It does not really sound right, right? So the price action actually happening before this sale will happen to this zone is what you should focus on. You're focusing on the current, but you're using the past data to predict what will happen in the current and in the future, right? So based on my analysis, I feel that GPSC can even dump all the way to this support level right here. You understand? So if market should come here, what should I do? I should look for what? A buying opportunity, right? So now look at this one right here that happened on GPSC again, right? I hope you guys are following. This is another example again, and you can see that when market came to this zone, what did it do? It bought. If market should come here again, what should happen? You can see the buy. What caused this buy, right? What caused this buy was something what we are going to dive into soon, right? The concept of demand and supply level on the chart, right? So what causes buy, right, is what we call demand areas on the market, right? Demand area on the market, right? So looking at this previous price action, we can tell for a fact that this is going to buy. You don't need a soothsayer or you don't need a prophet to tell you that this thing will buy. Because why? These are strong levels from the higher time frame. See, if you're not getting what I'm telling you right now, but one thing you should take home, or what should you take home as you are going home, right, is don't neglect higher time frame zones. You understand? If you didn't really get anything, I'll be saying this night, but the only thing you can take home, is something, but that something should be, don't neglect key areas from the higher time frame. They are very, very powerful. Whether you're a day trader, whether you're a swing trader, those key levels on the higher time frame are very powerful, that you should never joke with them. They may make or break you as a trader. They may even give you a strategy on its own. But all I'm saying is that if you didn't really get anything I'll be saying this night, pick one thing, which is don't neglect the higher time frame key zones. Right? So this happened, these are price action of last year, right? And I'm not saying you should be going to last year data. I'm just showing you what, if you want to go to last year data, that's on you, right? It's fine just for back testing. But all I'm saying is that as a day trader or as a swing trader, right, you have to look at past data, at least some months back. You can also look at years back too. I think there was a trade that a trader actually caught some months back, and the level that he caught the trade from was at 2002, a strong key level from the year 2002. It had to trace back, right? So what I'm saying is that I'm not saying you should go back to 2002, 2005 data. No, all I'm saying is that at least look at 1 year data at most, some months, 2 months, 3 months data to be able to predict what will happen in the future, right? So imagine you caught this buy. This happened January last year, and some late December 2024, and this zone right here was February last year. So you're expecting that if market should come here again, that should be around um let's say September or August or November this year. Market should drop to this zone based on your analysis or whatever you've planned out for yourself, right? So I said I'm going to be sharing an ebook that is going to help you guys, right? I think Comrade will help us with that one later on as we progress. Now, the main topic for today: what actually drive this price up and down. Remember, I said those key areas actually push the market, but what are these key areas called? This is what brings us to what demand and supply levels on the chart, right? Now, let's give a very brief scenario of what happens in our current life, right? Remember that if there's a demand, if you have done economic and statistics in school, you may have understand um, something about demand and supply, or if you don't really understand economic um, stuff, right, it's still fine, right? But talking about economic and statistics, right, if the demand is actually more, or if there's much demand for a particular product, right, the price will increase, right? The price will what increase, right? But if there is no demand for that particular product, right, there will be a decrease or a reduction in price level. That's what sometimes in Nigeria here, right here, like let's say for instance now you're trying to like buy biscuits, right? And you can see that when there's a much demand for that particular biscuit or product entirely, the buyers or rather the sellers will have no option but to increase the price level. Same thing when there's no much demand, they have to reduce the price. You understand? And this is applicable in the forex market. If the demand is more, price increase, more traders start buying and driving price up. So if there is demand, listen carefully. This is intertwined with what I just said about mass psychology in trading. If the demand is more, now let me go back to USD card example. Let me go back to USD card example, right? All right. I think we are in where were we on USD card? Right. Okay. Where I gave that buy scenario. Where was it? Or was it GBP USD? It seems it was GBP USD. All right. All right. Now look at something carefully, right? When I said that if there's more demand for a particular asset, right, the price will go up. So if the demand is more, right, the price will increase as more traders start to what buy. So this is like an obvious key area that everybody's looking to what buy from, right? There's more reason and more push around this zone. Take note. There's a psychology behind this thing. This is what I'm explaining right now, and that's the psychology about this thing of why price is actually moving, right? This is an obvious level that everybody's looking to pay attention to. They want to buy, they want to make trading orders, and when there are more people active or more traders looking to drive price up, especially the banks, because the banks they also tend to most especially the banks they also tend to like be on trades like this, or they trade also, right? When they want to push price up, right, there is a sign that it gives, right? The way the candlestick are moving, it's giving rejection, kind of like the candlestick are rejecting, in the sense that if price tap into that zone is what pushing up. You understand? Because there's more demand to drive price up. You understand? There's more demand to what drive price up, and that's where buyers come and start buying. You understand? Because more people are looking towards execute their order at this zone. Take note. More people are looking towards execute their order at this zone. So there's more demand to actually push price up, right? So let's say for instance now market got to an obvious sell zone that was on USD card, an obvious sell zone, right? Now, let me explain this carefully. Now, when markets or if market eventually gets to this high right here, price may or have been would have been exhausted by then. Take note, because there's no much reason to push price up again. So that brings us to what we call supply on the chart, right? Your supply area, uh, when there's an oversupply, right, price falls, and as a result, there are more sellers and less buyers, right? So oversupply, which means that the buys has been exhausted, right? Because definitely market cannot be buying up. There has to be some exhaustion of price. You understand? When market has got into a place where it can no longer push further up again, that's bring us to what? Oversupply, and price starts failing and falling, bringing more sellers into the market, not buyers. Now, if you look at it closely on this zone right here, you can see if market this is an obvious supply area. So supply you sell, demand you buy. So you can call this your supply area. So if market should come here, there should be an exhaustion of the buying momentum, and if market should come here, oversupply should take place and price should fall. Based on number one is that we've seen it happen before, which is here. We've seen it happen before again, and it's about to happen again, right? Number two is a supply area, right? It's a supply area. So price has been exhausted, right? And there's no more strength to push price up again. Number three reason, because this is a key area, this is a key level from the higher time frame. Remember, I said that the higher time frame supply or the higher time frame demand level are very, very powerful, right? You should not joke with them, right? And that's what we are seeing right here on our charts, right? The higher time frame key areas are very powerful, right? So these are the reason why markets will want to push up or push down, whatever the case may be. If you're looking for a buy, if you're looking for a sell, this would be the reason for some exhaustion in price and some increment in price, right? So these demand and supply area are what you should market, right? But do you just buy blindly? No, you wait for confirmation. Now, how does the candlestick react if it comes to this zone? We'll tell you what you need to do. If the candlestick comes to this zone and breaks it, which means there is still more demand for that particular commodity, and this can be caused by economical events that's happening around the world. Yes, let's say for now there's a war happening, or currently in the US they increase the interest rate or reduce the interest rate. You understand? But basically, war events, right, tends to play a very key role in things like this, right? Aside from war events, it's also what we call CPI data. I believe I've explained CPI before, right? Consumer Price Index, and FOMC, Fed rates. They want to increase interest rates or reduce interest rate. All these fundamentals will tend to play a role if markets will actually if there will be more demand for this particular currency, US dollar, or there will be an exhaustion of US dollar, and market will have no option but to react and sell from this supply area. Supply area are very, very powerful area that you have to take note of aside your demand level on the chart, right? Like I said before, the market is going up. What does that tell you about demand and supply? It means that there is a lot of demand for that instrument, right? I think US oil, right, during this US and Iran war, right? Let's look at oil charts. US oil. Let's look at US oil, right? Okay, and this is the chart for US oil. During this US and Iran war, right? This has really been a clear example right? Because right now, sometimes there used to be much demand for oil, and when there is much demand for oil, it can be represented here with this big move right here. You understand? And okay, let me go to the a time frame lower, right? Now look closely. Now, if there's more demand for oil, right, or when war is happening, right, oil tends to what escalate and go up, right? That's what we mean by if the market is going up. What does that tell you about supply and demand? It means that there's a lot of demand for that particular what instrument. So when there's more demand for oil, oil um has no reason but to go up. And when there's war happening like this US and Iran war, it will affect oil also, right? Pumping upward. Now, if the market is going down, which means that there's no much demand for oil, market has no option but to what? Start dropping. And you can see that during this week, this is the week price action, market started dropping on US oil, right? You can see this is my sell, and this is a sell position on US oil that the market was dropping. Now, if you look at this chart carefully, you will see that there was much there was no much demand for oil at this point,